So just a few days ago, the crypto market got absolutely hammered by the largest liquidation wave in its entire history. And what was at the heart of it all? A wild 2-minute mystery on the world's biggest exchange, Binance. And it turns out everyone was pointing fingers in the completely wrong direction. I mean, we're talking about an event that just wiped out hundreds of thousands of traders in a matter of minutes. It literally evaporated tens of billions of dollars from the system. It was like a financial earthquake. And yeah, at first, everyone was pretty sure they knew what caused it. So the story that immediately took hold was that this stablecoin, USDE, had suddenly depegged on Binance, and that started this massive chain reaction of failures. And it sounds plausible, but as we're going to see, the real story is, well, it's a lot weirder. The initial theory got it completely backwards. Okay, so first things first, let's pull apart that initial theory. Because honestly, understanding why everyone was wrong is pretty much the key to figuring out what actually went down. Look, the most important thing to get here is the cause and effect. Think of it this way. The USD depeg wasn't the fire. It was just the smoke. The market on Binance, it was already breaking down before the stablecoin ever lost its peg. That depeg was a symptom, a sign of a much, much deeper problem. All right, so if the stablecoin wasn't the trigger, then what the heck was? The whole thing, it all comes down to this absolutely terrifying 2-minute window where the market just vanished. Okay, check out this timeline. At 8 p.m. UTC, you get this surprise tariff announcement. Creates a little anxiety, right? Totally normal stuff. But then, what happened at 9:18 p.m. was not normal. All the liquidity, the bids and asks that actually make a market, it just started getting pulled out all at once. And then by 9:20 p.m., bam, the order books were basically empty, a complete vacuum. You see, in a normal risk-off event, market makers might get a little cautious, widen their spreads, pull back a bit. That's just smart. But this was something else entirely. As our source material puts it so well, this wasn't just caution. It was a flat-out disappearance. So what happens when all the liquidity just evaporates from the world's biggest exchange? Well, you get price action that should be literally impossible. Let's actually look at the data, because it's wild. Okay, so Bitcoin and Ethereum, they've got deep liquidity on tons of different exchanges, right? So they held up okay, relatively speaking. But the smaller guys, the altcoins, they rely almost completely on Binance to figure out what they're worth. They were left totally exposed, and that's where the real carnage happened. Let's just take XRP as our first example. So on Binance, the price tanks, goes all the way down to about $1.25. Meanwhile, at the exact same time over on Coinbase, another huge exchange, the lowest price it hit was $1.77. That's a price gap of over 41%. I mean, in today's high-speed markets, a gap like that between two major exchanges, it's almost unthinkable. But believe me, it gets so much worse. All right, now look at Atom. This isn't some tiny coin. It's a top 60 asset. On Coinbase, it hits a low of about $2.87. A big drop, but okay. But on Binance, it traded for 1/10 of a penny. Yeah, just let that sink in for a second. That's a 2,871 times price difference. The same asset, at the same moment, was worth almost 3,000 times more on one exchange compared to the other. This isn't just a market getting a little weird. This is a market that is completely and fundamentally broken down. Okay, so when you see evidence this crazy, you'd think the conversation would focus on one thing, right? But instead, it's gotten totally sidetracked by a bunch of noise. I mean, for days, people have been arguing about, is it the USDE team's fault? Is Binance's $280 million compensation enough? Or maybe it was some mysterious whale. But you know what? All of that is a distraction from what really matters here. And that brings us to the one single question that we should be asking. What in the world happened inside Binance's trading systems between 9:18 and 9:20 p.m. UTC? Okay, let's zoom out for a minute, because this whole thing isn't just about one bad day of trading. No, this goes right to the very heart of the market's foundation. It's about trust. To really get how important Binance is, think about the CME for things like oil and gold. That's where the world figures out what those things are worth. Well, Binance plays that exact same role for crypto. It's the backbone of the whole ecosystem.
So imagine if the CME suddenly said oil was worth a penny a barrel. The entire global financial system would be demanding answers, right?
And the fallout from this was just huge. You had hundreds of thousands of regular traders completely wiped out. The big market makers, they lost billions. And these complex delta neutral funds, they just collapsed, which caused even more chaos across the market. So, what was the official explanation for the biggest liquidation event in crypto history? Get this: a temporary glitch in some trading modules. That's it. That's all we got. No detailed report, no data, no real explanation for how their systems could fail this spectacularly.
And that right there is the real heart of the matter. For so many people, the money they lost isn't even the main point. It's the silence. It's the total lack of accountability, the lack of transparency after something this big goes wrong.
Which really leaves us with this final, kind of chilling question. Crypto is supposed to be about trustless systems. But the reality is we all rely on these huge centralized exchanges like Binance to be fair and reliable. So if the biggest player on the field can have a total meltdown and then just offer no real explanation, that exposes a massive risk for everyone. And it makes you wonder, what happens next time?